following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OX Radio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block, everybody. Today, you have your host, Mike Tusaw, subbing for Mark Longo, who is vacationing out in beautiful Las Vegas. Although he says he's not vacationing, he's there for work, but we all know what happens in Vegas stays in Vegas, so we won't even go there. We are in for an exciting episode today of the Option Block. But before we get started, we'd like to introduce our usual cast of characters, as Mark would say, starting with the rock lobster himself, beaming in from the great state of Maine in the northeast corner of the United States, the master of disaster, the man who needs no introduction, Andrew Giovinazzi. Andrew, how are you today?
See, I can't believe you wanted me to host the show when I could get an intro like that. That would be foolish. I have to let you host the show, doing. I'm good. It's a sunny day. Life is okay. The market's moving around a little bit. So things are good. You live in Maine. How bad can they be?
That's true. That's a good point. Yeah, I showed my son Rocky 3 for the first time the other night, so I'm kind of getting into this whole introduction thing. But pretty soon I'm going to try and study under Michael Buffer to see if I can be the next Let's Get Ready to Rumble guy, but that's a whole nother career. And in the next corner, and our other guest that we have on our show today, usual, the Viceroy himself, coming from Options Express in the beautiful city of Chicago, Illinois, Mr. Alex Jacobson. Alex, how are you today?
Hey guys, doing good. A lot of industry news today. Today was not an easy trading day. CBOE was down for much of the day. Maybe we'll talk about that a little bit, but all good. Market ended higher, even after the Bundesbank ripped the floor out of it today for a little while. But as I say every week, a lot of macro news today, and we're all good here.
Sounds good. And with that, let's dive right into the trading block.
The Trading Block.
And welcome to the Trading Block, everybody. We had kind of an interesting day today in the markets. Saw the stocks actually had quite a rally, but then probably around 1:45, 2 o'clock, we started to fade a little bit. But nonetheless, to say today was a boring day would definitely be a lie. It's nice to know when it's always pleasant when, at least me personally, when I'm looking at the screen and I don't want to fall asleep at 1 o'clock in the afternoon from lack of action. And I definitely didn't have that problem today. Alex, we'll start with you. What were some things that you guys are seeing over at Options Express during the day, and some key market movers?
Well, Friday is a weekly expiration, the way all Fridays are. And interestingly enough, a lot of stuff was trading through strikes. One thing that was active here today is Exxon, which announced earnings today, actually disappointed a little bit. Going into the earnings yesterday, it was bouncing right up against the 90 strike, and it was one of the few names that sold off today. So it doesn't look like those 90 calls that expire tomorrow are going to be an issue. Looks like right now like they'll go off worthless. But the big news today was CBOE was down for most of the morning, and that's always a difficult and frustrating series of events. Obviously, the industry could trade equities and ETFs, but couldn't trade SPX and VIX. And as you pointed out at the beginning, the annual options industry conference is out in Vegas today, and not a good day for the industry as a whole. I mean, CBOE going down. No one takes any joy in technical problems, and a lot of Schwab customers last couple of days had denial of service problems. A lot of our competition had denial of service. That wasn't what was going on at the CBOE, but always makes it difficult, and it'll be interesting to see kind of what the post-mortem is of what went on at the CBOE today. And one of the things it demonstrates is the challenges of single-listed versus multiple-listed products. You know, if one exchange goes down, you still got right now 11 more that'll trade the Spider, but only one that'll trade the SPX and the VIX. And that's especially challenging. If the CBOE hadn't gotten open today, the SPX, the conventional SPX, stops trading today. You could have lost the last trading day. So it'll be interesting to see what comes out of all this.
Now, when stuff like that happens, do you typically see a rise like in other things like SPY or some of the other offshoot VIX products in some way in terms of volume?
Yeah, you see that. And this is where things like having a portfolio margin account can be such a good thing, because if you got SPX positions and you can't trade out of them because the exchange is down, in a portfolio margin account, you could hedge by trading some SPY against it, and then hopefully when the SPX reopens, you can roll out of the hedge and you'd be okay. It had to be challenging given we were up, 10 S&P points during the day and up 100 on the Dow before the market reversed itself. No one takes any joy. Having worked at two of the exchanges, people always used to say to us, you must take some joy when one of your competitors is down. And the truth is, you really don't take any joy in that. As much as the exchanges compete, as much as the brokerage houses compete, when someone has a bad day because of technology, it's a black eye for the industry. And yeah, you could have traded spiders. You could have traded some of the leveraged products. Obviously, all the other exchanges were open and running, so you had competitive markets. But it's tough when you've got singly listed products, and shortly the Russell goes to two exchanges, so at least there'll be some redundancy. But it's something we in the industry all need to think about and look at.
Yeah, and it's really the case. One thing, just to kind of expand on what Alex said for all of our listeners out there, just in working in the business for as many years as I have, the exchange representatives that I've always worked with, and Alex being one of them through the years, they've always been very friendly to each other. There's really no bad blood amongst exchanges or anything like that. They're always very courteous, and just having done webinars with them and that type of thing in the past. Yeah, occasionally when sometimes I'd be doing an illustration for a webinar, I'd accidentally put SPX in there, and so I'd politely be asked by a representative from the ISE, please use SPY instead of SPX, and things like that. But ultimately, Alex is right. It's you never really want to see something like that happen in terms of technology. It's very much it's a very friendly business along those ends. Now, in other areas, sometimes it's not so friendly, but just to expand on what Alex said, it's absolutely the case. Now, Andrew, did you guys have any clients and any VIX products today that were calling you and just kind of asking what's going on, or what's going on in the VIX?
It was weird. You know what? We have guys that have positions on, but for the most part, they're short options, so they didn't care.
Okay.
So don't trade it and let's open it on, May, whatever. So,
right. Let's have a VIX holiday.
We watched it. We talked about it. The market wasn't doing much. Everybody tried to guess where the VIX was going to open, and then it all opened down 30 cents. So about the only thing interesting I saw about the VIX today was the May volatility rose a little bit, which I kind of expect actually, and some of the near term vol rose a little bit. Mostly because I think the implied vol is just too cheap. Other than that, there just hasn't been that much going on. There wasn't much going on. So, the volatility of the VIX is starting to get to the lows of the year again. So, the market is not coming out and buying that insurance like they normally do.
Got it. Now, here, I want to kind of expand on that a little bit too, in terms of like when people say, okay, well, I'm protected for my downside because I have a stop loss in place. Folks, there's no guarantees that the exchange is going to be open during the day. You always have, like today turned out to be something that was not a huge deal. But in looking back to 9/11, gosh, almost 12 years ago now, when the exchanges were closed for a little while, you don't know. And so with that, by having rights with your contracts or by having a put option in place to protect a stock position or something along those lines, there's a difference between a stop loss and having an option hedged position in the proper way. And when things like this happen, being prepared is something that's very important.
Not to sort of beat this dead horse, but that's fabulous advice, Mike, because, you think about 9/11 and you think about all the questions you would get from people before 9/11 about options clearing and what if you don't open. And, you kind of look at those and say, come on, don't be silly. And as someone who had an office, about 2 blocks from the Trade Center, and I lived in the hotel across the street from the Trade Center. I actually had a suitcase there for 18 months while they rebuilt the Millennium. One thing to point out is one of the reasons they had to get the markets open by the next week was it was expiration week. And imagine what it would be like if you didn't have prices and markets for expiration week. And again, to your point, Mike, one of the challenges with weeklies is now there's an expiration every week. And people at the exchanges, people at the vendors, the exchanges, are going to work day and night to make sure markets stay open for these events. But today was tough. And the irony is the CBOE's hosting the annual industry conference in Vegas, and it's a tough day. I mean, I worked there in '99 when they lost power, and that was a nightmare event. The irony of that is I was on a marketing trip to Schwab in San Francisco, where I now work for Schwab. And the funny thing is, we'd known we'd lost power, and I was on my cell phone back to Chicago. And before I walked in to see Schwab, I dialed back to Chicago and I said, "Do we have power?" And they said, "No." And I said, "Okay, I'm going to walk around the block a couple times before I walk in and get my head handed to me, by a customer simply because they can't trade." The industry is going to have to look at singly listed products and create some redundancy. And that's going to be painful. It's going to be tough, but we learned from a day like today.
Yeah, and thankfully it wasn't too crazy of a day to have it for this to happen. Next thing I want to talk about, Alex, you had mentioned something that during the day about a bank that took the floor out of the market.
Yeah, the 100-point decline today came when the Bundesbank, the Bank of Germany, came in with some commentary about the ability for the EU to be doing some of this rescue work that they've been doing. And in fact, the headline that crossed the tape was Bundesbank rejection of OMT, the outright monetary transactions. The headline says knocks nearly 100 points off the Dow. But what this is doing, it's putting Europe back on the map again and potentially looking at the ability of the ECB to prop up the challenged economies in the Eurozone. And that's really what took the sales out of the market today. We all pointed out, we were up 100 at one point, and then we sold off quite a bit during the close, only closed up 24 on the Dow, so really off the highs. But back to macro issues, Europe is back on the table. It'll be interesting to see how this plays out.
Yeah, we needed something else to talk about, I think. So, all right. Well, with that, that will conclude our trading block for today. And let's dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the odd block. This is when we come out and we actually talk about things that kind of make you raise an eyebrow a little bit and think, what's going on with this option? So, Andrew, what's going on with those odd options?
I got it. You know what? Today was, I would say it's like an option block special because there's just a lot of weird stuff. So let's go on with the first one. A name called OTEX, Open Text, a company engaged in providing a suite of information management software products, whatever that means. Anyway, the volume on the name is 288 contracts per day, so it doesn't really trade a lot. Today, though, it was up $6 when I looked at it to 62.14, trading pretty much at a 52-week high. And some customer traded the May No 60 put spread 2,300 times for $4.35. The interesting thing is the May open interest was around 3,500 contracts, and November was basically nothing. So what I had a hard time figuring out is if they actually closed an open position in May, and then it looked like they were buying the position in November, because the November implied volatility was up a little bit today. But I mean, the large open interest, I don't know when the guy would have bought if you bought the May 60 puts, for the most part, they were pretty in the money. So kind of an interesting, not quite figuring out what they're doing there, because if they're long stock and long puts maybe, and then they roll it out when we have this big earnings announcement. So I don't quite know. I couldn't find a really good entry for them for the side they wanted to do on those on the May 60 puts. It was kind of like a funky one. It actually ended up on the day up $7. And, it was an earnings came out. I don't know why. I guess the profit wasn't as good, but the stock was up $7 anyways.
Wow.
It's just hard to figure out sometimes. I guess, somebody could have bought these puts, this is definitely an all-time high. So you're buying these 60 level puts, maybe back in March. So they bought some protection a while ago and are rolling it now, essentially.
Yeah, that would make sense to me.
Makes sense to me. That's kind of right in your wheelhouse. Another one here is the name Supernus Pharmaceuticals, SUPN. Trading down $0.50 today to 466. And it looks like paper sold the SEP5 calls down to 40 cents, 1,800 times in a block. The average volume is 453 contracts. Now, the open interest in these SEP5s were 40 cents. What looked like happened is there was a steady seller of these contracts, and they pushed the implied volatility down to 56% in September, which is pretty low. On the other hand, the May volatility was up to 70%. So clearly something going on there, right? So they're bidding up the May and they're letting the SEP fall. Now, I think this was because this looked like a fairly large, like an overrider of options. I think there might be an interesting trade there, like somewhere between SEP May or something like that. But anyway, instead of buying the May for what you pay for it, you buy the SEP because they're so much cheaper. But that would just be me. But anyway, I thought, again, that's an interesting trade. The fact that they're bidding up the Mays, but you could have those SEPs for so cheap, very interesting.
And that's the other, like a lot of people don't look at, they think that, if because it's a more near-term option that it's always cheaper. But if you go out a month further, if it's only a smaller amount greater in cost, a lot of times it makes sense to buy that option. Wouldn't you agree?
I think so, exactly. I mean, you're paying, an extra 20 cents and you get to buy, 4 more months. Makes total sense to me. And you definitely will benefit if the stock goes up. So that's what I would think, but apparently that's not what the paper was doing today. One other very interesting trade, this company, Talisman Energy. I really found some great names here. And this thing actually trades. You never heard of the name before. Very interesting type of trade in here, where the OC13 calls and the OC10 puts traded in 2 blocks of 10,000 each. So it's 20,000 contracts total. First trade was $1.07. The second trade was $1.09. To be honest, I'm not sure if it was a combination or a straddle. Now, it went up marked straddle, even though it's a strangle, if it would be a strangle. So it's kind of hard to figure out. My gut tells me that somebody was trying to buy these. That was a straight buy. The stock is somewhere right in the middle. I mean, it makes good sense for a collar candidate, but I'd keep an eye on this one. It wasn't a very expensive strangle. It's a $13 stock. I'm sorry, it's $11.82 stock. Paying $1 for that strangle all the way to October, it just didn't look very expensive to me. So it might be an interesting thing. This is an oil and gas producer, so you never know. These guys hit a gush or something like this, the thing can go rocking. And the last one was a company called, the new name is called PERI Network. The old name used to be called Incredimail. I had to put this in there just because the old name was Incredimail. I thought that was kind of,
I like that
name. Some kind of digital media email product or something, but they have an incredible email product.
It's Incredimail.
Incredimail. Good.
I think I'm gonna get the patent on Incredi option then.
PERI is the name, is the ticker. It was up a penny to about 11.80 as I wrote this. And the 12.5 calls are the big traders. Now, they traded 962 times, and you're like, oh, Andrew, that's not very much volume. But for a name that only trades 619 contracts, it is. And the open interest was 789. What I thought was interesting was the action in here. So the name started the day up close to $12.5. And even people were buying the May 15 calls for 15 cents. Now, we know how much we love that, about 100 and something, 150 of those traded. So early morning action, the stock was bid up quite a bit. Call buyers came in, and then somebody pulled the plug on the name. And all the sellers took their calls and banged them out, maybe in frustration and unhappiness, because the volume turned to sell, pretty hard selling, and the volatility ended up being down 5 points in May by the end of the day. 95% of all the option was in the May contract today. So a very, looks like people tried to buy some calls as it ran up on some news, and then they got flushed when basically buy the rumor, sell the news type thing. So again, an interesting bunch of volume nonetheless. What really got me though too was the fact that people are buying the May 15 calls for 15 cents this morning. That was a pretty solid chunk of speculation there.
That's what it sounds like. That's for sure.
And that, with my fedora on, I'm going to take it off.
Very good. Very good. And we're actually going to initiate the random block the random breaking news block that just came across the tape block. George Soros, it appears, just purchased 8% of a stake in JC Penney. Now, recently they had a change in CEO, so I'm guessing that had something to do with it. But Alex, being the Viceroy news hound that you are, what have you seen thus far on this story?
Yeah, came across the tape a couple minutes ago, and the stock has popped about $1 in after-hours trading. Closed in the comprehensive market. The comprehensive close was 15 and a quarter. It was trading up in the 16.30 area. Now trading on around $16. But it's an interesting play here. You know, what is Soros thinking? Is he buying the company? Is he buying the real estate? Is, this another Sears Holdings play? I don't know. Just cross the tape. And, nonetheless, a very smart guy. Used to trade a ton of options. When I worked at the exchanges, that was one of the people we saw a lot because he had a very robust desk when the fund still had a lot of public money in it. But stock is right now it's popped about 80 cents. So interesting news.
Yeah, I think they just, from what I'm guessing, and this is just a pure guess, I just remember hearing about how everyone seemed to hate that old CEO, and now they have a new CEO in. That's maybe one of the reasons with which he's doing it. Now, from Andrew and Alex, from your experience, whenever you have a big buyer like this, a lot of times the next day, what typically happens to the options in terms of volatility? Is this something to where vol goes down, or it makes it more uncertain where vol goes up? Or what do you guys, a lot of times in your experience, what do you think might happen to the options tomorrow morning?
Vol pops higher and people start buying both sides of it to kind of trade the news. And with a name like Soros that has such a powerful investing history, you get a lot of pilot fish who want to hook on and go for the ride. So
I agree. It's like this is like a good time to maybe sell like downside put spreads or something like that, or like buy one put and sell two down there, some kind of ratio put spread, and try to sell the volatility. Still get a little long. Give yourself a little room just in case. But yeah, it's definitely. It gets people excited. Look at what happened when Icon bought some Chesapeake. He bought Netflix. These guys are pretty good at buying companies when they're in the ash can.
Yeah, they're not billionaires because they're stupid. And I have a great story. When I worked at the CBOE, I had an educator who worked with me who's now head of planning. And we were going up to do a class at Soros, and I will moderate the story a bit. But he had a Loyola MBA, and his finance professor. I know this is going to get me either beaten up or something, but I'll clean the story as best as I can. And we're riding up in the elevator to go see Quantum, and he looks at me and he says, "What are you going to teach today?" And I said, "Nothing. I'm going to talk to the desk. You're going to teach." And he said, I'm a little intimidated here. My prof in grad school told me this was the smartest man in the world. I kind of looked at him deadpan and said, your prof understated it. He's smarter than that. But we had a great session. We were supposed to go 90 minutes, and I think he went 4 hours. And when we were walking out afterwards, going to get some dinner in New York, he looked at me and he said, "This is the best day of my life." That's let me caveat that. That's before he got married and had kids. But it was a great session, and it's a funny story. Over a cocktail one day, I'll include the color. But smart man, had a great trading desk. His famous story is how he took the Bank of England for a little over $4 billion on a very low risk back spread. And, said they're not billionaires because they're dummies. The interesting lately has been watching, and God, why am I spacing now? The Netflix guy you just talked about, watching them fight on CNBC. It was, billionaires throwing Ackman and Icon. Yeah. Just fighting on NBC, and they're both billionaires. And it was some of the best TV CNBC has had in years. But this is an interesting play, and I agree, Andrew. I wouldn't be buying the out of the money calls tomorrow because the vol, I suspect, is going to pop. I think it's a great put sale, and with a name like Soros in there, you got to assume it's got a floor, unless the tape is wrong. I doubt that. It's the journal that's reporting it. I think it's going to be a great candidate for put sales. I think it's going to be a terrific candidate for put spreads, especially if the out-of-the-money puts are not really pumped in vol. But I'd be cautious about buying the out-of-the-money calls tomorrow. I mean, most people instantly associate stock goes up, vol goes down. This is going to be the case where I think stock goes up, vol goes up, at least for the midterm. So I'd be careful about playing in those out-of-the-money calls.
Yep. I think that could be Smoke City unless, it really takes off. But
yeah, you never know. But I think this is a good lesson for a lot of people that are hearing the show. And that in terms of when you get a situation like this, like Alex said, a lot of people do assume the inverse correlation between volatility and the underlying. I think this is just another good example of how having experience in the business like you guys have really can benefit, and you can learn in such situations like that. And so I think it's important to know these things.
Yeah, I think like the 15-14 1x2 put spread, something that you get a little credit for, you probably in June, and maybe buy an at the money call.
Yeah,
if you really think it's going to take off, but the company's still got a long way to go.
Yeah, to your point, Andrew, if you're compelled to buy a call, you don't have a lot of capital, and maybe you're not suitable to sell puts or sell put spreads. Buy something that the volatility doesn't impact. So more in the money or at the money, but be careful about, buying the out of the money stuff. This is just classic understanding vol. It's the disappointed customer who, sees the vol pop, buys an out of the money call, the stock goes up and their call goes down, and they just, hate you and hate the options market for eternity. And the reality is they traded the wrong option. So I'm, two hands up to you, Andrew. It's if you got to buy a call, if that's the only way to trade it, buy something a little in the money where vol doesn't have that much impact on the trade. But I think it's a great put sale, or consider a put spread depending on your risk profile.
All right, and so that concludes the odd/Soros block for today. Now let's dive into the strategy block.
The strategy block.
And welcome to the strategy block, everybody. Today, since it's my show, I get to do what I want to do, I'm going to modify the strategy block a little bit to kind of go through some things just some stories, a couple of old war stories that Andrew and myself are going to talk about in terms of just not doing the incorrect strategy at times. Now, the reason that I'm doing this is just to kind of expand upon what Alex and Andrew were talking about of ways with which to have an understanding of volatility when you have events like what happened with JC Penney today. So I'm going to lead off today with a person that I talked to on the phone a few years back. This is probably, about 7 or 8 years ago. And I was actually working for Options Express at the time. And so a guy calls me in. He had seen me on a webinar, or I forget what the situation was, but he said, "What can I do to get a more liberal margin agreement in my account?" And so I looked up his account and I said, "Okay, well, I see you're just on a cash account right now. There's margin documentation. You fill out this, that, or the other. That's how it's done. And then the compliance department will give you a thumbs up or thumbs down on it. That's the process." Obviously, there's more to it than that, but I'll spare you the details of the old 2005 Options Express compliance process for margin. But so with that, he's like, "I need more margin right now. I mean, I got something, Mike. You need to do this. I need this right now." So whenever anyone says something like that, my ears automatically perk up, and I'm thinking, okay, what is this opportunity that you have that you need more margin on right away? So he said, "I have a way with which it's guaranteed, it's mathematically impossible not to make 6% over the course of the next week." So I'm like, okay, tell me about your trading plan, sir. So what we did was he said, all right, I see this stock, XYZ stock. I don't even remember what the stock was, but he looked at XYZ stock. I'm going to short this stock, and I'm going to short this stock, and I'm going to sell a put against it. And then at the same time, so that way I get income on it. Now, the calls on this stock are so much cheaper than the puts that I'm going to buy the calls to protect myself to the upside. So what he was doing is he was shorting the stock and selling a put. So it's basically a reverse covered call, for lack of a better term. And to protect in case the stock did go up and he got squeezed out of his short, he bought a call option to protect himself to the upside. And so I knew what I was going to say to him right when he did this, but I looked at it, did the math on it. I'm like, you're absolutely right, sir. If this is the case, you're guaranteed to make 6%. And he's like, I knew it. I found something. I said, well, here's the problem. So I went to the quote detail section of the Options Express website, had him do the same. And I say, do you see how this stock actually pays a dividend on it? And he's like, yeah, so? I'm like, well, when you're short stock, you pay that dividend out of your pocket, sir. And so he looked at that and says, okay, well, how does that affect me? I said, well, let's do the math again. And then we did the math again. And after having to pay that dividend that was coming out during that time frame, he actually would have locked in a negative 2% rate of return for that same time frame had he done that same strategy. So with that, what I want to emphasize is have an understanding of everything. And if it looks too good to be true initially, it is. It not probably is. It is. And that's my strategy war story that I have to tell for this.
That was pretty good. But that was, I think that's a reasonable like rookie mistake, don't you think?
I think it is, and that's one. I guess it's not really a dumb strategy. It's just, I think that would be more classified as a rookie mistake on that because he didn't know. And in order to actually find that, you have to do a lot of research and put a lot of time into that. But for those of you listening to the show, if you ever find the reversal out there, the reversal strategy that guarantees you a percentage and it's mathematically impossible to lose, look up that dividend first.
Right. I have one that might be a little more complicated to understand, but it's as a trader, an order came into the crowd where they tied the value of a call. They were trying to sell calls, and they tied it to an amount over parity. So, they wanted to sell an in-the-money call, but they wanted to sell it a certain amount over parity. The problem with that is that's all well and good, but it makes a big difference whether the stock is, $55 or $45. Because, when you buy calls $1 over parity, when the stock is much lower, that's just like buying a very, very cheap put. So, of course, when the order hit the crowd, I need to sell, it was a large order, a couple thousand contracts. So, we started selling stock, and that drove the stock down. And it was down about $2 or something like that. And then the customer got filled $1 over parity, which is what he wanted. But the underlying was, about $2 lower. So when you have to be very careful how, if you want to send an order, how it's tied to the underlying. And that was like a large fund that, supposed to be smart guys. They thought they were being smart by putting the order in like that. But you need to tie it to some low in the stock. If you want to be $1 over parity, that's fine. But you can't leave an unlimited, you can't put an order in like that without a limit. Because in order to fill it quickly, the market had to absorb about 250,000 shares of stock, which is, and it drove it down a couple bucks. So it did crush the volatility, though, pretty good. The volatility went down. I think it was a stock that the volatility was around 55. And by the time the order got filled, it was 35. Wow. It did come back, over the next couple of days. But that was what I would say the most misunderstood order I actually saw hit a trading floor.
Yeah, that's something. And like what Mark Longo says, the big money isn't necessarily the smart money.
Not necessarily, apparently.
Alex, do you have anything to add to the list of stories that we've had thus far?
Yeah, I'm going to try to do this as quickly as I can. I worked at the CBOE, was on an OEX roadshow out in California. I met a father and son. The dad was a dentist. The son was a grad student at Caltech. Very, very bright young man. They cornered me at a roadshow and said, "Can we come to Chicago and get a tour of the OEX pit? My son has developed a foolproof, riskless strategy." And I, of course, said, "Sure. Come to Chicago, give me a call. I'll stand you right up in the OEX. I'll put you in the booth if you want. I'll stand you in the crowd, anything you want. But there is no foolproof, riskless strategy." And the dad said, giving the son $1 million, Caltech grad student, he's back tested it. It's perfect. It'll work. Can we show it to you? And I said, no, don't show it to me, because you're not going to be happy. Anyway, 2 weeks later, they show up at CBOE. We put them in coats and ties. I take them down into the OEX. We're back up in my office in the Institute afterwards. And the son says, let me show you this. It's foolproof. It makes money every time. And I said, okay, show it to me. And he says, I'm going to do this ratio in the OEX. I'm going to sell these many deep calls. I figured out a ratio. I've back tested it. It's never not worked. And I paused and I said, you'll be instantly early exercised because you're selling deep calls. It's American style. And the father and son look at me like, what? I said, yeah, you'll be instantly exercised. Those are American. And the reason that thing has some rate of return is because you're financing the risk of early exercise. And the son looks at me, and I thought he was going to cry. He goes, I've worked on this a year. I've back tested it. I used the Cray computer at Caltech. And I said, I'm sorry, but, once again, if it looks too good, something's wrong. You're either missing a component, you haven't thought about early exercise or dividend or carry, and I hate to put the pin in your balloon, but the strategy won't work.
That is excellent. All right, and that concludes the strategy block for today, and let's dive right into Around the Block.
Around the Block.
And welcome to Around the Block. This is where we talk about what we're watching in the coming days and weeks of the marketplace. We'll start out with Alex. Alex, what are you guys watching over at OX?
Well, we're waiting for Amazon earnings. And as I said, Exxon earnings today, a little bit disappointing. Next week, AIG, Pfizer, early part of next week. But a lot of the earnings season has come and gone, and it's been okay. It hasn't been awful. As I say, we'll look at how JC Penney opens tomorrow and Europe. We'll see if this news flows back into Europe, and all of a sudden Europe goes back on our screens as a problem.
Absolutely. Andrew, what are you guys looking at?
Similar. Actually, I'm keeping an eye still on Microsoft now the stock's traded 32. It hasn't traded this high in a while. I'm not quite sure what lit the fire under everybody, but I'm happy about it. We are again looking at keeping an eye on gold, and I'm looking actually. It was funny today because I'm like, wow, you know what? The FXE implied vol is basically is back down to around 8%. It was the lowest it's been, I think, in this year, if I am not mistaken. I'm pulling up a chart of it. So I'm like, well, it's almost ready to kind of revisit that thing. The Italian, they elected an Italian guy. Maybe that, got everybody happy again, but like I said, didn't take much. Yeah, it's, let's see, we're at I'm not going to say it's the 6-month low, but we're at the low end of the range in there. So, but again, interesting what's going on in there. Maybe also, I think with the European thing is there's been some pushback on austerity, and the Bundesbank is saying, okay, you want to push back on austerity? We'll push back on giving you money. So it seems like we've had this continual, nobody wants to make the hard choice in these democracies, I think ours included. So at some point the government's got to stop spending money, and you got to loosen up the labor market. So we'll see. That's my little soapbox for today.
There we go. While we're on the subject, what do you guys got coming up at Option Pit, where you're on the soapbox for an even longer period of time?
We have an event. Who is at the event shall remain nameless, but it is the Street Monster Investment Conference on June 7th. Lots of great people will be there. I don't think we have anything with RCM lately. And we will, and actually Option Pit will be having a free webinar about the benefits of our gold class to I would call them I would say like active investors or people that do manage their own money, which is most of our clients. Actually, we have clients that are fund clients, professionals actually are more and more taking our gold class so they can understand how volatility works, how you do stuff. And these are all the reasons why you might want to take our gold class and spend a little bit of bucks on a quality education. That way you don't have to go ask Alex, who will throw cold water all over your strategy after you've invested a year in it. We'll just do that for you right away.
There you go. There you go. And Alex, what do we have coming up in the land of OX?
So Andrew will never be on again after today. So just kidding. Saturday, we're doing our live in-person as a virtual. So it'll be the 8:30 Saturday. Just come to the site, and we're going to replicate what we do in our live program, which is everything from streaming charts, trading volatility, understanding the platform. And we're going to do that virtually, so you can be home in your slippers with the dog and a cup of hot chocolate and view that one on your computer. And as Andrew pointed out, Europe's going to be interesting here for the next couple days. We'll see if Europe, if this all goes bad, it's going to have a huge impact on metals, and it's going to have a huge impact on rates. So come out on Saturday, or come to your computer on Saturday, and we'll have an interesting market tomorrow and next week.
Absolutely. And on that note, we'd like to thank everyone for coming today. We'd like to wish everybody well, and folks, let's have a successful trading day. So long, everybody.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.